The purpose of today is to have a like a share session. How are things going for you? What are you frustrated with? What's hurting on the market? What's pulling you back? Are there shortcuts that you're not taking? Shortcuts that you are taking, or steps that you're not taking? I want to hear from you. This is about you. I don't want to really talk for the first half of the session. I'd prefer to understand what's going on. So, Brett, let's kick off with you, my friend. What's your trading experience like these days? Brett, you good? All right, let's move on. Elias. I think Brett's having mic troubles. Okay, mic not working. That's right. Elias, tell me more about your trading, brother. What are your frustrations? What's pulling you back? What's good? What's bad? Let me know. The what? Okay. So let me go to the... Alright, so I'll write that down here, and then we can get to that on the second half of the session, because I can run away with certain topics and I want everyone to get some opportunity to get up there. Susan, tell us about your trading experience. What's the latest? How are you feeling? What's holding you back? What's frustrating you? Yeah. That's amazing. Okay, that sounds super positive. Who we got? We got 8856104215. Obviously someone's birth name out here. Or maybe that's Brett Rogers' restarted microphone. Nope, there's Brett over there. Yep, there we go. Yeah, no worries. So tell us, Brett, what's your drawbacks, frustrations, challenges? What are your pet peeves with trading right now? Yeah, very good points. I can't wait to chat to those ones. Nick Burden, you beautiful bunghole. Tell us more about your experience with trading. What are your frustrations? What's hurting you? What's holding you back? Nick, just let me know if you got a problem. I think you used to have an issue with different mics on your different devices. Just let me know if that's the case in the chat. We'll get back to Nick. Here we got you, Jason. Tell us more about your frustrations with trading. What's holding you back? What's less fun than you would like it to be? That's cool. Yeah, I think the answer to some of what you're going through there, I've got in mind. I'll get back to that when we get the opportunity. All right, cool. Kay, tell us about your trading experience, man. What are your drawbacks? What are your frustrations? Very valid points. I have a similar answer for you, and I can't wait to get to these answers. This is great. Actually, I love this, man. We should do this. We're going to do this once a week, because your challenges will change, and as you make your way through the progression of your experience hours within the markets, different things will come up. So every week on Wednesday, we're going to have these sessions just to do a temperature check and provide some solutions so we can perhaps collectively take on these markets with a bit more ease. Zane, tell us about your frustrations with the market. Oh, awesome. Yeah, all good points, guys. Thank you for sharing. Rod, tell us about your frustrations, my friend. Does Rod have Rod, you got microphone access? Okay, cool. So who else have we got here? I think cool. That's I think about everyone, unless I've missed someone. Brian, is there any frustrations that you're feeling with the market right now or in trading? Brian? I heard something about Jamie Butler. Why is that important? I don't know. Okay, creating a story. All right, cool. I think we've got enough to go on today. Brian just sent me a message on the chats to let me know if you can chat or not. I think we've all got a turn to shed. Tracy, did we ask about Tracy? Tracy, what are your frustrations with the market? Awesome. Okay, guys, let's get into it. I think there's a lot to talk about. Just out of interest, just speaking to Tracy. So Sumit is let me just move to somewhere else so I can move this, is a psychiatrist. And there's a psychological difference. There's a difference between psychologist and psychiatrist. I learned that today. And I asked him, is there a link between losing and a person's personal makeup? And he says, most certainly. You're speaking about the mindsets of traders who are prone to losing, or the mindsets of traders who have lost consistently? And I asked if there was a difference. He said, yes, I would assume. Okay, so he's obviously a professional. He looks like someone you would go and get some advice from. I would definitely. What I'm getting at is that one could be vulnerable to losing. He answers money of certain fundamental psychological predispositions, and the psychological factors could be rooted in karmic and other deeply conscious, it goes on to use a word I've never seen in my life, proclivities. Okay, so that's obviously a Google definition word. Whereas there could be some who end up losing despite not having such vulnerabilities purely due to being at the wrong place at the wrong time, symbolically, that is. Okay, so those would then lead to secondary damages on a person's psyche. And like losses are it's like mental abuse. When you get a psychiatrist saying that losses could lead to secondary damages to a person's psyche, like that's pretty brutal stuff. So that was his response to my question about, is there a psychological link to those who are losing on the markets? And apparently there can be. So I want to, before answering the questions, I want to share my kind of frustrations and fears and freak out points in terms of my own environment. And those are right now that I'm like having a mild panic attack that I can't teach everything I know, because by doing so, that could really discourage those who aren't in the same way inclined. And that's difficult for me because I think most people, like their collective on the planet, only make up like 3% of the planet. Like my kind of configuration only make up 3% of the planet. The sloth-like people make up 3% of the planet. There's so many different personalities that make up their own little segments of the planet. And I want to just mind dump all that I know so that students can be prepared for anything. And I'm coming to realize that even just by doing skeleton stuff, core stuff, fundamental stuff, it's still a lot of information. Like just a simple topic over here is throwing my videos over the 20-minute mark. And I think multiple videos of 20 minutes is going to be like this library of books against a wall that someone comes to look in on and goes like, that's a lot. So I'm really struggling with what to share and what's most pertinent without missing out on things that people need. So these sessions are going to become very important to the way I communicate and obviously what you guys receive. So thank you to everyone for showing up. It's meaningful to me. And it is really great to know what's happening with you, because I can be wanting to teach Ganzilla where there are guys who are just battling to find the time to trade. So it's like different worlds. And checking in and understanding where you are gets me into a position to have a meaningful conversation. So let's kick off. Brian, I don't think we got any response from you, so I'm just waiting for that on the chat. Let me just try to get the chat up again in case anything pops up. Cool. All right, Elias, your lot size. Okay, so position sizing, and what I'm doing is going to talk to the framework of the course I'm currently making right now, and we can build it from there. Position sizing will come, let me just fold this so we're nice and prepared. Okay, so position sizing would fall under paper trading and trade plan and trading responsibly. So that definitely, okay, so Brian's at work. So that covers quite a few of the different components. Let me just bring up Medic. Being a Mac user, there are certain things that I have to endure, and that is Windows-based software. So by accident, I moved this toolbar and it squashed out, and then all of these boxes became super squished and I couldn't see anything that was happening. So I had to delete the whole system, bring it back, and then reinstall everything. It was such a pain. So now that we're here, there's some more setup that I need to do. But to be honest, to get here wasn't that difficult. All I needed to do was install find where the MTOPS auto assistant was in my downloads folder, open it up, and here we are. So I hate saying this sometimes. When we are working with the lot size, what you need to be doing is using this. Okay, so the asterisk to that is MTOPS doesn't force any of their traders to trade on FTMO. FTMO is a arena that shapes traders to get into the right disciplines out the gate. And because they deal with 5% drawdown and 10% max account drawdown, then that kind of sets up the parameters as to how to risk and how much to risk in your trades. And when dealing with just this, where there was only lot size, I grew a very disdainful relationship or taste towards dealing with FTMO, because no one could give me an accurate calculation or idea as to how big one lot was. Because with changing price, that will adjust the volume or the lot size alongside with it. There we go. And for me, that was just like, I don't know, throwing darts into the dart and trying to hit the bullseye. It wasn't good for risk management and all the other pains that one has to experience. So in dealing with Brett, he said that he would be able to resolve this issue. And I said, mate, I would love you forever if you did. And now I love him forever. And what he did was take a super complex environment that was pre-existing, modified it to our requirements, and then 7 versions later, here we are. What you're looking at is a MTOPS designed environment that will support the position sizing and the lot size and your trading. What else do we say? Your paper trading experience and trading responsibly. And Kay says, I can't get the MTOPS auto assistant to M5. Not sure if it's not allowed. Nope. Okay, so Kay is asking if anyone can use... I'm not quite sure on the question here, okay? I can't get the MTOPS auto assistant. Yeah. The MT5 itself. I don't completely understand, but an answer to perhaps what you should be doing. Are you using Windows or Mac? Okay, so if you are suffering alongside us with dealing with Mac and obviously operating from Windows, go to the resources segment inside the website. Go to install files, MetaTrader 5. Install it from there. And then just simply double click on, because this will download as a zip file and it'll have all of the tools inside of it, including a document to describe how to install it. So you download that, the zip will start to download, you open it, install that from your downloads folder, and then go to, I think it's called indicator and script. Double click both of those files, and when you do that, these will pop and you'll see it actually show up in the different folders. So indicators, when you open up the MTOPS indicator, it will show under indicator, and then scripts, when you double click on script, it'll open up here. So why you want the indicator is because this is what the indicator is. It's just the name that they give it. And why you want script is because this will open up the position size. Are you operating from the website or from software? Oh, that's the reason. You need to download the desktop software. So go into this environment, download the files, and then install them. You're welcome. Once you have installed it, you need to go to File and not go to Log into Trade Account, because it'll only offer the MetaTrader 5 demo version. You got to go to Open an Account and then search for FTMO. And then when FTMO comes up, you go to Next, put your login details over here, which you'll get from your FTMO website, and then that will open up everything. Yeah. Okay. Should I open up a Bitcoin chart right now? Nah, let's use this. Okay, so Elias, in terms of the position sizing, you have 2 options. One is your risk size, or the other is your fixed amount size. If you're working with the trade plan, my recommendation is to put a fixed amount inside there. You just have more control that way. Risk percentage is for the more experienced traders and for guys like myself who can get away from the initial gates of high risk. So what I mean by that is when you open up an account, you will be closer to max drawdown which means it's the most dangerous time for you. The key is to try, obviously, make as much profit as possible. It's like a no-brainer. But the many benefits of getting away from your opening balance is that you'll have leeway should things go wrong. And the further you get away from your initial balance, the bigger the positions you can have. So it's that initial first little fight that you have to get through. And once you do, you can start using the risk percentage rather than the fixed amount. My recommendation, if you're on a $200,000 account, is you've got to make $800 profit a day. And to get $800 profit, you need one trade that is a risk 1:1, which will return $800 on a trade. Or alternatively, you could have multiple trades at a 1:1 at $400. It all depends on the temperature of the market. So we're not going to talk about trade plan just right now. My thinking is that if your position size is too big, if it's not working, then jump off of risk percentage and go down to a fixed number. Try $500. If it says it's too big, go to $100 and start moving your way up. Generally, when it says that, it's because your stop loss or your required target or amount that you want to get back is too close to one another. So what I mean by that, I'm just going to close it off and open up again. Unfortunately, it's just one of those things. So you'll see now that these 2 points are really close to one another. And if I go, let's go 3% of account, it's going to say our position size is 100 lots, and there's no chance in hell that FTMO will allow me to trade with that. So I'll go to maybe 2%. All right, 92 lots, that's too big. Oh my gosh, we're almost out of time already. 1%, that's 16 lots, and 16 lots is quite big over there. So to increase the distance over there, which will reduce the position size, can I explain it differently? For a 1:1 ratio to be valid, and to get, let's say for example in this instance, $2,600 when price moves $10 or $20 in price distance on the US 30, they'll have to make that a really large position size for you to earn that much. Okay, so if price moves $30 over there and you're earning $2,600 by price moving $20, then you have to put in 100 lots inside. So that's not feasible. Just simply drag this further away, and you can see the further away it gets from the position, the lower the position size gets. Okay, so I'm going to end this call here and then send out a new link so we can end off on that point and then start the next suggestions in the new video. Okay, so look out for the new link in the Telegram group. Okay, so discipline and patience are what you're fighting against. Yeah. Okay, yeah. I think a lot of guys are experiencing that. So I'm happy to chat to that. Just to give everyone a chance. Alison, what are you frustrated with when it comes to trading? No, I'm asking Alison. No worries, I should have made a cleaner transition. Okay, I'll just wait for Alison to unmute. Dan, what frustrations are you feeling when it comes to trading? Sure. Yeah. Yeah, I think a lot of guys are feeling that frustration. Graham, what are your frustrations on the market? Yeah. Okay, so I can quickly speak to that. Emil's going to add the click and drag scaling access to the time and the price bars. The reason why he has it as Zoom is so that he can selfishly trade with this on his iPad, and guys on their mobiles can click and drag on their other devices. So I said, Emil, stop your nonsense, my friend. Do the click and drag scaling. And he said, no problem, fine, I'll do it. So he's going to do that tonight. What you want to do, Graham, is just use your mouse if you have a mouse. I hope you have a mouse. And use the middle bar up and down whilst your cursor is above the price and the time bar. So just go over the bottom, so put your cursor over the time and price, and then just go back and forth. This is detrimental to your scaling environment, so it's very important that everyone knows that you can do that. And if you want to zoom in and zoom out, obviously just scroll anywhere in the white area on the charts. for those who are using, I don't know what camera I'm using right now. Okay, all right. Yes, you roll it instead of grab it. That's a good way of describing it. And then, this is so weird for me. My fingers are clean. And then other one is that got weird. You put your fingers together and then have the mouse cursor above, and then you roll it. Okay, yeah, I can't do it. On the environments as well, for those who don't have a mouse or are on the road and just want to use their touchpad. Okay, great. So in terms of the setup, Graham, what I was just saying in terms of my frustrations right now is I want to teach everyone everything that I know, but I've been doing this for the last 5 years and I know a lot. So I'm getting vertigo in terms of what it is that I actually should be teaching without trying to shortcut anything that should be taught. So these sessions are super beneficial, and scaling is a big part of that. So thanks for sharing. But in terms of your setup process, I want you to share your pains with me so I can understand what it's like to be like a new pair of eyes on this, as I can imagine it being frustrating where things aren't necessarily as chronologically set up as they can be. And that's currently like the challenge I'm tackling right now. So Graham, feel free to come to me in the DMs and just be like, man, I don't know what to do next. I'm super frustrated. Please help me out. As just in terms of the video tutorials, we set this up so that guys had the opportunity to trade with all markets and all time frames. So this is taught in TradingView, and the second video over here says go and set up an account in TradingView. And I didn't even think about that. And someone actually went and did that after they bought the software. They learned on TradingView and they were like, wait, hold on, there's software for this? And I was like, oh shit, that's totally my bad. So I just need help from fresh eyes to understand the pain points so that I can get onto those environments pretty quickly so that the onboarding process can be better in the future. And also the information that I'm putting together now will be really good. What's the word I'm looking for? Not recourse, rehash, revisit, refreshes for those who may have forgotten some of the hacks that can make things work for them. Okay. Who else have we got here? I just want to make sure that everyone's heard. Leo, tell me about your frustrations with the market. Okay, I think Leo's in a tough internet section. It's a bit of dropping of the call there. All right, cool. Don't worry, Leo, we'll have another session this time next week. All right, so let's get into the different... yeah, no one wants to trade. No one started trading so they can learn to be more patient. I'm going to start moving a bit faster now because of the amount of time things take to explain for some reason. So, Elias, we got the lot size spoken about. Okay, so what I'm seeing here in terms of time is a major factor for many. We're taught from a mindset perspective that we need to be hustling and always bringing the money in by exchanging our time and skills so that we can be bringing in to obviously keep us afloat. And time is quite a difficult component to break when we've got our jobs and we've got our existing lives that have been currently set up and wanting to trade as well. So what are solutions around this? The tools within MTOPS have certain parameters that are there to help you. The countdown timer will be your best friend if you're battling with the time components. I think to Brian's point, or is it, was it Brian's point, that trading the higher frames would be better for those who aren't able to day trade. I suppose I should say the 2 minutes and 8 minutes and the 32-minute combination with the FTMO setup and all these things that I do are tailored to my needs. I think it's important for those who are battling with time to get realistic with what their needs are and how to best meet those objectives. Many guys walk around blindly with the markets in terms of their plan and the way that they treat the markets. The challenge there is that they don't necessarily have the same discipline that they've applied in every other area of their life to get to where they are now. And that is tact, and that is planning, and that is maturity towards dealing with ways in which you make money. So the way I see the market is it's my number one client. And I want to work with this client so that I get paid really well, there's a nice long-term relationship, and there is an understanding between us. I would recommend those who are stuck in the employee mindset, which it is a mindset, and a mindset that it took a while for me to break. And through speaking to successful people and successful traders within the community and seeing a pattern that start to emerge, the pretty clear split down the middle, if there had to be one, between successful traders and struggling traders was the mindset difference between an employee and an investor. And this is something I encourage those who are currently working for a salary to get their head around, because there's a certain conditioning that needs to be rewired, and it has to be rewired. You can put it off, but I would recommend you start tackling it now rather than later. And just to protect your job, maybe keep your trader mindset after hours or in the charts, have the market as your client and have that relationship there. And then keep your employee mindset between 9 to 5, Monday to Friday, just so that you don't get fired and you come back to this video and you say it's my fault. So the time factor is super important, because you have to look at where you want to be 3, 5, 10, 8 down the line from now. If you put your same amounts of effort that you put into your day job into trading, would your return be greater? And for me, I saw that the possibilities with trading were endless in comparison to I was earning well in the rat race. However, my sacrifice in the rat race to earn well, it wasn't necessarily worth it. And I've got stories to back that up. What threw me overboard was the question, would trading provide a prospect, at least, for a much higher income than my corporate life and my side hustles could offer? And quite simply, yeah, 21,000 within an hour, or earning 3 figures in a week, is quite substantial in comparison to what I was earning per month. And it would be for most people. 5 figures a week isn't a normal salary income unless they work for the government or some corrupt bank or something like that. So battling to find the time, we can approach in 2 ways. One is, where is the future of your now focus, attention, and energy going to be better suited? Is it in your current job, or is it in trading? Is trading going to bring you in more than your current job? If the answer is yes, then start scheduling your day differently. All right, so that's one component. The other component is, are you trying to be a day trader where you just don't have the time for that? Are you putting too much pressure on yourself? So this 2 minutes over here is something we discovered this year. Look at that, beautiful. And this is tailored for guys who've got the resources to operate it. It's not for everyone. 8 minutes, similar story. 32 minutes, I'd say, is for everyone. And there's no real reason why anyone here can't be up to date with the 2 minutes, with the 32 minutes. And then the 1 to 8 are those who are pretty comfortable in their careers and they just want to have the additional income for their account as they carry on their lives. 512 is your bigger position sizes over a longer period of time. And then the 1 to 8 is for guys who just want to invest in this environment and not necessarily take trading too seriously. I have all of the options here because I use the information to trickle down from the top down to where we're working with, of course, and to feed the TTI and that kind of stuff. But for those without time, there's no excuse really. Let's be frank about it. If you're serious about this, you'll take this seriously. And part 2 to that is your 32 minutes is something that everyone can do. 8 minutes is something that everyone, your 1 to 8 is something that everyone can do. And simply do it. This is hours, this is days apart. I'm sure everyone's got multiple opportunities within days to get into the market. The other thing I want to chat about is don't underestimate the power of this marker. The candles all look the same. It's a bit deceiving. We have the same size screen, presents the different size markets. Okay? And when these environments come through in terms of the actual forecast and how long it's going to take to get there, people will say, I don't have the time. Sorry for being a bit brash here, but what the F are you doing that you don't have the time to do a chart where you just click once, the preset lands, get that done in 8 minutes, and you wait a day until the next turning point comes into play? Or alternatively, we're working over here 5 hours, 6 hours. Do you know how much you can get done in 5 or 6 hours, guys? It takes less. I do a full analysis in under 8 minutes. It takes a couple of minutes and dropping down a marker to give you an indication of where to go next. Now, those who are coming home from work and allocating time to trade then are going to run into some frustrations in that the market isn't going to wait for you to come home from work. So my recommendation is have something you can trade off of. My favorite item to have is a MacBook Air because it's lightweight, it's durable, it's got a long battery life, it's fast, it connects to Wi-Fi without droppage. It has all of the fundamentals for something that is fantastic to have as a trade component or partner. That's what I was looking at my phone for. Most phones have got some AI in it where you just say, hey Siri, remind me, blah, 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 blah. Work with the market if you don't have the time. Just go, hey Siri, remind me in 5 hours to look at the kill zone. And then go about your day. And even those who are sitting, and we can get into, I think we can segment into those who are watching the trade, even those who are feeling very latched into the trades, you could be psyching yourself out instead of allowing the markets to do the work and get back to that same discipline. So my recommendation, once again, is to break that threshold from employee mindset and develop your investor mindset, where the major difference between the two is that an employee will work for money, an investor will make money work for them. It's a simple concept, but you guys really need to allow it to sink into your core to understand the true difference. Because the guys who are being psyched out, the guys who are not applying patience, those who are feeling anxiety, those who are watching the charts, those who have the delusion that you have any form of control over a position that's already, or price action rather, because you can close your position. You have any control over price action once you've opened up your trade, are just lining yourself up to feel exhausted, out of control, and have your attention feed into the market where in truth you can't do anything about it. There's a principle. I learned something when I went on to property seminars, and I was actually a Rich Dad Poor Dad property seminar spin-off, and we learned all these tricks and all that kind of stuff. And one of the key things that took a while for me to understand was, in property they say you make your money when you buy. And I was like, what are you talking about? You make your money when you sell. But I now understand that the right preparation, the right property, putting in a cheeky offer, below market environments, going in and using leverage and putting in the correct behaviors up front when buying the property, getting low interest rate, blah, 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 getting correct financing, doing your due diligence and muscling hard in on a great deal up front after doing research and paying the right agents and information feed and blah, 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 is where you actually make your money. Because by the time you sell, you have all that extra capital. Or even if you sell at market-related prices, you've at least got a hefty profit from buying under market and doing your due diligence and all that kind of thing. So it's the same thing here with trading, or it's very similar in the sense that you make your money when you buy, because your preparation, your identification of what the market's doing, understanding your client, All right, reading its body language, reading its moods, reading its flows, its requirements. Like for those who have ever sold in your life, and the reason I got into sales is because I didn't realize how much Robert Kiyosaki actually had a role in my life as an early 20-something. And he said that there's rich dad and there's poor dad. He worked for Xerox, and he said the number one thing that he had to learn was how to sell, because in business, if you can't sell, then you don't really have a business. And I hated that concept because I didn't want to convince anyone of anything. Like, I'm someone who wants to convey information, but convincing, it goes against my soul. And I got into sales in that environment, and the understanding of clients had to become a part of my day. And when I look at the market now, there's so many similarities in that. So if anyone who understands how to deal with clients, I employ you to, or I encourage you, or I invite you to adopt the mindset to treat the market as your client. Don't go to your clients, Bitcoin, and say, hey, dickhead, give me a profit. Hey, dickhead, buy this now. Buy my product. He's going to say, you don't understand my needs, my friend. If you don't understand my needs, my flow, my behavior, what I require of you, you're dead to me. So I'll go with someone else and give them profit instead. Hey, where's Blano? Do you want some profit? I'll take some profit. You know what I'm saying? So that's a mindset adjustment I'd like you to make the shift between. All right. So the employee will have the delusion that they can do something when price action has their position. You can't. You make your money when you get into the position, because that's where your homework and your due diligence comes into play. And then you switch over to an investor mindset and say, you know what, even if it takes longer than it needs to be, I'm making that money. You can start doing like this whole rap music video in your head if you want. Make that money, do the work for me. And that's what you want. You don't want to be doing the work. You're not getting into trading to live a life of freedom where you have this delusion that you're still doing the work. It's not the way it goes. I've provided you the tools and the knowledge so that you can make money work for you. And maybe I should start tailoring the message and the course around that a bit more, but I'm no Robert Kiyosaki. I'm no Donald Trump. I haven't got billions in property assets in New York, and maybe there are better mentors out there for you that can guide you, and perhaps find them. But that's the major shift that I had to make in myself. And it was a painful one, because it's embarrassing in terms of how, when you get honest with yourself, how many bad behaviors and thoughts and ideas and traits that you've picked up along the way from other people and your managers and the boss saying, oh, more meetings, more sales, blah, blah, blah. Like, you've got all these bad things inside your mind that you need to let go of, but you need to let go of them. I want to say it again. You need to let go of them and start making money work for you. All right? Okay, so Susan, the drawdown. Let's have a look real quick. Have we got an open browser somewhere? Nope. Okay, there we go. Okay, so let's go with the easy math, $100,000 account. And you'll see that there are certain parameters in which FTMO wants you to perform within. That being the daily loss and the maximum loss. So this is what we call drawdown and what they call drawdown. This will shape the shit out of you. Let me tell you right now, because the stomach that you need to adopt in having institutional money at your disposal to profit from, in a complicated way of describing that, will kick you into professional mode more than anything else. So without all of those long, weird-worded situations where, in truth, my mind was actually thinking about something else. I forgot what I was talking about. Sometimes that happens. The max daily loss and the maximum loss refers to the amount that you are able to lose within a day or overall. And the numbers over here. So if you have a 100,000 account and you lose more than $5,000 in a day, thanks for coming. See you later. You don't fit our trader profile to use our money in the markets. Maximum loss, same thing. 10% of whatever size account that you're working with. Need some water. It's 4 o'clock here. It's been a long day. So apologies, my brain just goes whop. Okay, so the maximum loss is 10% on any of their accounts, which means that if you break the 90,000 threshold on a $100,000 account, whoop, thanks for trying. That's the sound that you've just been denied. Whoop. And what I want to talk to you here, though, where it comes to really putting in the work in up front, is that they consider drawdown as price moving in the opposite direction, like at all. So what that isn't is stop loss. I'm just trying to look for an example. Okay, so if you open a position over here, and your stop loss was set over here because you are, oh my gosh, running out of time again. The stop loss over here, drawdown will consider all of this price action as well. So if you open up with a $3,000 position over here and price went down to minus $6,000, but then went up to your target over here and you got $8,000 or $10,000, the fact that it went all the way down to here and it didn't hit your stop loss, the fact that it went down to over there to minus 6,000 means that you have lost your challenge. So price moving in the opposite direction is considered as drawdown. And that's why we have things like the kill zone and confirmations, so that guys will trade on confirmed turning points and launch from the kill zone outwards to avoid the drawdown. So the kill zone is there to avoid the drawdown, in the sense that it's there to protect you against market slippage and incorrect turning points, and of course running yourself into trouble with FTMO. Okay, Brett, we spoke about getting in and out of the market. Yeah, so identified, use the higher time frames if you are struggling with time during your day. And then more wins than losses. Brett, I do think that you need to dial it back to work with your creation of fundamentals. To lock down your confidence in your trading and get predictable profits and build that repertoire up, or that win streak up, so that your mindset is ready to punch through into the next phase. So if you are taking on more wins than losses, then that's saying that you're doing counter trend moves and not following the simple market structure requirements. My recommendation is only work on the 32, 128 and 512. If you're struggling with the time, only open up positions. So don't even worry about the 2 minutes. So we can take the 2 minute away and simply trade with trend. If we have one transition showing up, another transition showing up, and a third transition showing down, that's a no trade for you. Get this right first. Trade with trend. Trade on a confirmed turning point. Make sure that your market structure understanding is correct. Scaling is not difficult. We've got the resonance ring now to make it super simple to set that up and super fast. And the kill zone, just wait for it to leave kill zone. Set your reminders on your phone, and you can use the different tools that we have over here, namely the marker, to say, all right, cool. In 1 hour, please remind me to check chart. And then in an hour, you can pull out your MacBook Air or Chromebook or whatever it is, have a look at the chart. And guys, if you're serious about trading, you'd have a laptop with you or something that you can trade off of. Sometimes the market is quiet. A lot of the time there's consolidation and that kind of stuff. The ease of pulling out a laptop every 6 hours or every 3 hours or something to that effect is, I believe, something that everyone can do. Even if you go to the water cooler or sneak into the area where people have coffee, just open up a cupboard, open up your laptop, do 8 minutes analysis and carry on. So it's certainly possible. Justin says, so my understanding is that the daily max drawdown includes unrealized loss. Yes. Leo says, working out great, buying a car at the moment with my wife, so listen quietly. Only problem is me waiting for the trade. Okay, so the waiting for the trade needs more preparation and getting in a little early. Okay. Wait for Leo. The simple solution here is your kill zone confirmations. And we've actually highlighted that on the chart to be gray. So if the price is in the gray zone, don't open up a position. wait for it to get into the white area, and then only open up in a position. An investor will have money work for them. So my recommendation is to make money work for you. And getting into a transition inside a kill zone says a lot of alarming things. You don't need to do the work, and you don't need to put your team at risk. Okay, so your position is team. If you want it, the money is your team that makes you more. Don't put them at risk. If it's in a kill zone, see them as going to die. The kill zone is there for a reason. There's so much area in these transitions that even at arc 1 to arc 4, which happened over here, it happened over there, happened over there, there's more than enough profit to be made. There's no need to be greedy. Greedy is attached to the employee mindset, and that's something you need to break. All right, so we're going to do one more Zoom call because there is still more to talk about. So I want to send it into the group, and those who can join, be my guest. And yeah, that's it for this call. I'm going to send the link through. All right, let's continue. Zane says that there is a attachment to outcome. So he's overly focused on the results, which obviously is linked into patience. Going back to mindset, that's definitely something that is of the employee environment. Being like an investor, if you think of an investor, I mean, on Shark Tank or somewhere cliche like that, they will see guys present, they'll understand the risk of what's required to put their money into someone else's business, and then just pray to God that it works out. Obviously, they have a look at the fundamentals of the financial statements and suss out the business owner, make sure everything adds up. However, they aren't necessarily overly, I have to be careful what I say because I think some investors, or most investors, might be overly attached to the outcome. However, it's not immediate for them. They understand that there are mechanics within that environment, there are certain metrics that need to be met. There's a section that we're going to be talking about in terms of knowing your numbers. All right? And I'll get into this in terms of your win-loss ratios, your daily goal, your win rate, your risk reward. Knowing your numbers are things that I don't think many are up to speed with. So to have if I say so, it's just like a trigger for my brain to start a sentence and try to figure out what I'm actually trying to say. It's crazy when you talk as much as I do at the last innings of the afternoon, how much additional help you need. And after analyzing markets all day as well. With the results heavy mindset, it's almost the same as being a Shark Tank investor, getting into a business and then over inflating the expectations, which evidently will create demotivation in the company and then despondency from the owners and the staff, and perhaps a break and breach in contract or performance not being met. The latching onto outcome could be detrimental to the health of your trading balance over time. An investor realizes that not everything works out. They have a portfolio that, go up here again. They have a portfolio that some things will work, but perhaps not all of them will. What matters to them is the long game. Being obsessed with immediate results could be at the detriment of the longevity of your relationship with this investment, aka yourself as well, over a long period of time. Get realistic. Realize for those who are serious about trading, this is not a stint that'll be around for 6 months. If you do this, this is your game forever. But for this to be your game forever, you can't be a superstar up front and then get sloppy later. The disciplines and mindsets and attitude that you are applying right now are going to keep you going for the long term. And keep that in mind. So being focused on the results or being attached to outcome simply says that you're rushing the process, therefore souring the relationship And we all know how far that's going to get you. Again, crossover from employee to investor. All right, timing and multitasking we've spoken about, Zane. Okay, so self-trust. We've got Jason speaking about trust, Tracy speaking about trust, and self-control. Nick saying that there's this lack of discipline. Now, I can lecture on that all day long. What I'm thinking is that if there is this concern so commonly, the way in which we have to go about resolving this problem may need to change. Sure, once again, I can stand in the front of the room and say, do this, guys, and I do it every single day. Whether or not the students or the class will do it is a whole different environment. So right now, perhaps the best way in which we should look at that self-trust environment is maybe get creative on our resolutions and solving that. So I'll speak about that right now, and then I'll talk about potential alternative resolutions thereafter. Knowing your numbers is one way in terms of how to develop self-trust. Perhaps the MTOPS students who are battling with self-trust aren't aware of where they are right now. And if you aren't aware of your performance right now, other than your account balance and your desires to win, then how do you plan on improving? How do you have metrics to measure against and to improve on? In the course, and this is, you can pause and write down notes for yourself. I've got here let's figure out what your numbers are. I went to the group and I figured out that, I was like, guys, help me with Excel. And the group was like, you figure it out yourself. And I figured it out. The win-loss ratio, I've got the different ways of setting it up and how to export your performance out of the MetaTrader into an Excel sheet, adjust the columns, and then get an understanding of what your win-loss ratio is. All right. Anything above 1, by the way, is considerably good. All right. Daily goal. What happens when you miss your goal? How do you hit your daily goal? Do you carry on trading if you hit your daily goal? Are you satisfied with your daily goal? If you miss your daily goal, what is your recourse there? These are questions you should be asking yourself as you unravel this journey. Your win rates, your win streaks, even better. I was asking myself what's the difference between win-loss ratio and win rates. Okay, real quick, your win rate shows how many trades you win out of all your trades. Okay, so this is win-loss more or less. All right, my apologies. Maybe I should go to win streak instead. That's more fun. Does anyone know it's a streak? Okay. Your risk reward. Going back to MetaTrader. What is your setup over here? And we got risk reward basically built in over here. If I drag my stop loss to there and I go to safe, that's a risk reward of 0.5 is to 1. That is 1 is to 1. That is 1 is to 1.5. If I want to make $500, I put in $500. I open my position, wait for it to get to target, and I'll earn $500. Okay. What is your risk reward on your environments? If you're using your own exchange, I want to short Bitcoin as well. Naughty. If you're using your own exchange, we have the Kelly criterion built, we call it the Blender criterion now, I guess, the MTOPS criterion built into this environment. If it says avoid here, don't get into a trade. If it says adequate, if you're on a crypto environment, put in 5% of your account. If you're on FTMO, put in 1%. Approved, put in 10% on crypto, 2% on your FTMO, depending on if that's your strategy. Let's go. 15% on crypto, 3% on FTMO. So real position sizing in terms of total accounts over here and whether or not to get in. And of course, we've got the different thresholds of where to profit from, all in relation to the actual market. No other service out there has given you the risk and reward in relation to the energy of the now moment on that specific time frame and transition out there. No one else has this, guys. And for those who are not using this and just using bogus numbers, stop doing that. Get to know your numbers. Get to know your risk-reward ratio. And the nice thing about our turning points over here is that it acts as a journal. So on this turning point, did I trade with trend? Am I trading in line with my plan? Okay, if I go back to turning point 3, none of these are selected. All right? Go back to 4. It's like a trade journal in itself. Use this to support you. I don't know anyone else in the world that is offering that. Oh, this is therapeutic for me, by the way. I was having like a spin out this morning. Is there any chance that people are going to learn MTOPS to the full capacity? Yeah, it's actually very possible. Alrighty, next. Back to trust. The way in which I've set up this environment has the top 10 influential components of a market. If there is anything I'm not considering over here, please let me know so that I can add it in. Through my years of experience, I have come to realize what is meaningful and what isn't. The power of simplicity that MTOPS offers takes away all the rubbish, all the garbage, all the unserving, bottom line, all the shit. So these 10 components that you have to consider, and I consider, as you see in lives and analysis and everything, all you need to do is just cycle from the top to the bottom. If you guys can't do those 10 environments, then what? Then I think you should analyze your priorities. Start asking, get to know yourself, guys. Like, the market is your teacher. If you're not trusting yourself, that's a sign, okay? The market is not only like your number one client for the rest of your life, but it's coming to you and saying, I know you better than your spouse, your boyfriend, girlfriend, partner, family, as I see through the facade. I see what's happening inside of you because X, Y, and Z. You're putting this above that. You're putting the outcome or attachment to outcome and result, your neediness above, or your ill-disciplined environment within, above doing the structure that's laid out for you. I'm not saying it's easy, and I'm working with that, and I want to simplify it and only teach the core and take away the fluff and all that kind of stuff, and I get it. That's my struggle at the moment. And just for the record, guys, let me try that again. For the record, guys, Emil and I are working hard behind the scenes to integrate and to automate the chart into the criterion so that the heavy lifting, as much as we can provide, will be done by the software. We are running into challenges. The browser shits itself when it gets too many instructions, RAM and blah, 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 blah. So we're going to make it lighter, faster, work around parameters. There's like headaches that you haven't even thought about just popping up. Like, boom, this is a thing. And you scratch it and then that becomes 5 things you have to solve. So we're working on that integration so that it supports you. But will that solve the problem of ill-discipline and laziness, perhaps, if you want to call it that? I don't think so. As someone who still has that makeup within them, or perhaps find a way, and that's why I was speaking to Sumit about the psychological link towards this environment, still find a way to trip up and still find a way to take on a loss. And then I'll take it personally. If you guys still take a loss after we've automated most of the strategy, that's when it gets personal, okay? So use the market as a teacher. It doesn't remember, it doesn't hold grudges. What comes up are things that you need to do. I need to say more about that on that point. Yeah, so use what you have because it's brought down to its bones. Financial freedom is not for everyone. You got to work for it. Okay, and the good news is that once you've done the same thing, once you've done the MTOPS practice time and time and time again, and I'll say the MTOPS practice because I've yet to come across anything that can contend against this on any level. So once you got this MTOPS practice down and you've got that muscle memory and you've been riding that bike and it's second nature and it's instinctual and you can anticipate the next environment just because you've got muscle memory that builds up that information before it even happens. I can look at a naked chart without, cycles and quadrants is basically all I need. I can look at a naked chart and forecast just with my naked eyes One day, maybe I'll get my head plugged into one of those Neuralink things so I don't have to chart as much, and maybe things become easier to explain and visually show you guys with what I see. But that's how far along I am in terms of repeating the same process over and over again. For the guys who like to be guys who are inventors, rebels, innovators, here's not the place for that. I've done that work for you. Unless you can step up, and quite frankly, many guys have tried, because that's cool and I welcome that on, and they've failed and they've landed up twice as disheartened after realizing that all the answers were here all along. If they only put the time, effort, and energy into working this, then the rest would be a lot easier. Here is the process. Do the process. Get over your own excuses. Do the process again. Get over your own excuses. Do the process again. From my side, where I have a responsibility and apology from a guilty environment, is I should have more videos out on how to use MTOPS criterion in a step-by-step way in a video format. But for anyone who is serious about their trading, I've got 300 plus hours of explaining each component on daily videos and live videos and private sessions and tons of content. I haven't taken any content down. There's nothing, I'm not holding back. It's all available. So sure, if spoon feeding in a chronological way, my bad. I'm doing that. I understand. I should maybe reduce the information so a fifth grader could understand it, blah, 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 course material creation, educator, blah, whatever. Still wrestling with that monster. But for those who are serious about trading, my investors, my hardcore guys, the guys who are here to win, these hours upon hours upon hours, go watch that stuff, go learn that stuff, go make notes on that stuff, and get over my strained voice, because sometimes I can't. I cringe when I have to do video editing. Hearing your own voice is the worst thing ever. Okay, so discipline, patience, mindset we've covered. Okay, set process. So Dan, stop making things tough on yourself. The process is actually right there. I was going to apologize and say we haven't got the setup in play as best as we can, but in reality, I've broken my back many a day to work through the process time and time again, doing the same thing over and over and over and over again. If you don't have a process by now, pull a handbrake on trying to become something beyond MTOPS, because that will just be burning unnecessary energy, focus, time, and attention. Do what is done on the lives, on the YouTube sessions, on the reminders, on the charts that get sent out, on the examples, on the Dow Jones every day. Let's run through the process really quickly. Okay, every single time I chart, I go from the 2048 down to, and this is there's videos on this today, there's videos on this yesterday, there's videos on the day before. Yesterday was a public holiday. I was working. The day before was a school holiday. I was working. This information is available. I don't actually hear excuses that it's the guys don't have a process just yet. Use the videos to your advantage. I go to the 128, the 32, and on each and every single one of those cycles, it is exactly the same in which we go through the MTOPS process. It's even in the keys, okay? So the hotkeys are pressed. Trend direction, boom. Then turning point, spacing, scaling, kill zone, time, cube, oscillator, price, support, and resistance. If you want to use this, plug it into the MTOPS criterion. If it says let's go, then smash it out the park. Your shits over here in terms of your stop loss and your targets. You've got your trend indicator over there. You've got your disciplines over there, which can be used as a journal. You've also got the things that you won't find anywhere else. You're not going to find a resonance ring with the Gann squares going in all different directions anywhere else. Not on TradingView, nowhere. Focus mode, you're never going to see this anywhere else. The PRI, never going to see that anywhere else. You have it all there. So in terms of discipline, it is a good time to really get to understand what's happening inside, because the sooner you resolve that, the closer you are to succeeding over and over again for the many years to come. And you have to, you can't get discipline now and then sloppy later. What you're learning now is going to be a part of your life for the rest of your life. And if you don't like it, then this isn't for you. Okay, breaking the rules. Yeah, again, you're not following the rules. You got to follow the rules to a certain degree to break the rules. follow the rules first and then go back to following the rules. All right, so Graham, the setup and screen scaling, we've dealt with both. And then patience, of course, Leo. So the market isn't going to whimper to your needs, guys. I'm going to start closing off now. My voice is hoarse. You're tired of hearing from me. The market is there as a needy client that knows itself really well. If we maybe switched up, because it's now the bottom end of the afternoon, see it as Victoria's Secret model who has got options and won't stand for your shit. So it's best you get in line when dealing with her or him. I don't know if they're Victoria's Secret, no, it's a bra company. I don't know. I'm not up to speed with my lingerie catalogs. Get into an environment where understanding it has options. It has its way about it. You know how to talk to the Victoria's Secret model. You're in the VIP room with her. If you rush the game, you're out of there. If you treat the Victoria's Secret model poorly, you're out of there. For example, if you just take my money, she's going to be like, ain't no stripper. And it's like, security, get this loser out of here. If you're impatient, like, you start having fun with this and get to understand that you're not always going to win. If you're in the VIP room with the Victoria's Secret models, you're going to get turned down. But that's okay, because you're going to pick yourself back up again and have the tenacity to keep going. Today, I was very frustrated. I had a very large position in on Bitcoin and opened outside a kill zone. And I looked at it, and it was on the 32-minute chart, not the 2-minute chart. And I thought, I'm going to have a little nap, and I'll rather just put this money towards the Dow Jones when the market opens. Open up my laptop after watching some bullshit movie, and there goes the market. For me, the pain of opportunity loss, even though I've done the work, is so super real. And what I have to say about that is I got to find a way, and I'm talking about we, got to find a way on how to shake it off and get over it. This is not the last opportunity you're going to see price run like this. This is not last opportunity to make money. This is not the last opportunity for you guys to be comfortable with money. I was speaking in the Discord yesterday about money wounds, and I attempted some form of meditation around that to see what your relationship was like with money. I think the video got between 50 and 80 views, whereas the Bitcoin analysis got up to 160, like double that. Those who are trading think that mindset as a topic is soft. It's key. The working with our tool set and the quadrants and the market structure and going back and applying the strategy and that kind of stuff, that's like the easy part because it's methodical. You see me do it every single day for months and months. That stuff is learned. The mindset stuff is the real challenge part. And what I spoke about in that conversation about money wounds is seeing money as energy. How do you actually see it? And we put a chair in front and you closed your eyes and you had to look at it. Like, how do you see money? Maybe some people see like a bag of gold. Maybe some people see, I don't know, notes lying on the chair or a bank statement with digits on it. I encourage those who are leaning towards mastery to start seeing money as energy. What look does money have? Oh, I forget the camera's over here and not there, so I don't mean to be rude with my hand gestures. What does money actually have from an energetic standpoint? Is it a dark energy? Is it stagnant? Is it low frequency? Is it stale? What is in terms of the distance you are from money? How far away is it? When I say put it in a chair, is the chair on the other side of the room? Is it 2 meters away? Is it right in front of you? Is it the chair against your knees? How close is this energy? And that is like a metaphor or just an energetic exchange of how comfortable you are with winning and with money itself. Because if the money is, the energy is a dark, heavy, stale, distant aspect, then how do you ever anticipate having money serve you or work for you if it doesn't even agree with you? In truth, money is neutral and it's got a clean energy. It's versatile. Whatever you want to do with it, you can put it to work and it'll work for you. However, if you have a bad energetic relationship with it, why would it work with you? That there's a disharmonic relationship there. And I then go on to say, if you were money, okay, so sit on the other side, go into the other chair, look back at yourself as money. So be in the energy of money. How does money view you? Does it want to be around you? Does it think that you're someone who is just going to pass it on as soon as you get it? Or doesn't know how to manage it? In other words, treat it badly or poorly or in an unresponsible way? Or do you have beliefs about it that you does it think that you still view it in the way that your parents taught you about money? How does money view you? And see what's happening there. And then my recommendation is to, within that video, have all the feelings that you have got there in terms of what you view as money, what you view money as, and the way it views you. And then breathe into that in your body. And once you do that, push that into an orb or a box if you're less spiritually crazy as I am, and just let it all out and breathe and just put that energy outside of you, and almost as if you're holding it. And then imagine to the left-hand side that's not you, or yours rather, and call it the ancestry chair. And whether it was your mom or your dad or your grandmother or your grandfather or somebody that messed up your belief, your teacher, your business manager, whatever, messed up your school principal, messed up your belief with money, just take all of that disharmonic energy out of you and breathe it out of you in totality. And then lean to that chair and just use the hand gestures because the brain picks it up better. And just push it over to that chair and say, this is no longer mine. Your pain and your hurt and that belief system is yours. It is not mine. And then go back and start clearing out that relationship that you have with the energy of money. Invite it closer. See that it wants to spend time with you. See that it wants to work with you. And so on. So these are money wounds and certain ways to start building relationships with money. That's the majority of the struggle. From my side, I'm feeling frustrated because there's a lot to learn, but at the same time, only if you haven't done it a few times. Once you've cycled through the process and watched the videos that are plentiful online, and the reasons why and my thoughts behind it and all that kind of stuff, and which are out there daily, and you've got the groove of this, the world's your oyster. All right, guys, my kids are home. I'm going to go spend time with them. Thanks for showing up. Thanks for sharing your concerns. Thanks for giving me a peek over the fence into your world and seeing what you're struggling with. I would love more of this. Please, let's hang out at least once a week. I'll try to condense the rants into maybe one session. However, the value that comes out, both for me and for you guys, is huge. I don't think either of us can deny that. So let's definitely do this again. And on that note, I'll say bye for now. And good luck on the markets.